MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website rickackerman.com. Rick, welcome back to the show.
Always a pleasure, Jim. Thanks for inviting me on.
The markets seem to be churning around right now. We've had some minor corrections and they bounce back the next day. Are they setting themselves up for some kind of major action this fall?
Of course they are. At least that's what we'd like to believe. You know, the market is so ho-hum today that even though I've got a signal that has flashed that is probably the most interesting thing that's occurred since February, I'm just kind of ho-humming it myself. Specifically, you know, we had a high in the Dow Industrials on January 26th. The high itself was 26,616. And over the next couple of weeks, the market sold off really hard. We came down to 23,360. That's more than 3,000 points. So the key high on the chart is the high that occurred on the rally from that low. We got up as high as 25,800. And just today, like a couple hours ago, for the first time since February, the Dow has rallied above that peak. So what that did in technical terms, in my technical terms, is generate a very strong, impressive impulse leg. It's turned the Dow Industrials impulsively bullish. And yet, I'm just having a hard time getting excited about it, and I'm even a little bit skeptical because if the Dow were to fall right now after having ostensibly broken out, if it were to fall from a current 25,869, about 600 points or so to 25,261, that would trip a sell signal, and I think it would be, well, I've said this before, but I think it would be the end of the bull market. So it's just, you know, the Dow's up 112 points today, which is kind of what it does when there's no buying whatsoever. It just sort of drifts higher. So I don't know what to make of it, but like everybody else, I'm thinking something has got to happen, but who knows, maybe not.
Well, the fangs got punched in the teeth, you know, recently after the Facebook, Netflix dissolve or dissolution, whatever you want to call it, over the bad publicity. And yet people, are they still buying them?
Yeah, it's funny how quickly everyone forgets. You know, at the time Facebook got slammed, the thing that Wall Street, I use that word in quotes, I don't see any investors, just a lot of wild-eyed speculators, but, you know, the news was that growth had become the big thing. It doesn't matter what your quarterly earnings are, how much money you made, it's how quickly your subscriber base was growing. So both Netflix and Facebook fell down a little bit on that, and Facebook had the additional problem that, you know, that the longer-term story suggests that they're going to become regulated in the same way that they are in Europe. They'll be regulated in the U.S., which is kind of an odd thing because all of these advertising firms like Google and Facebook, they're global enterprises. But there's no question that we don't frequently get in step with Europe, but their idea about protecting privacy, I think, is going to resonate with the U.S. public, if not necessarily the millennials who don't seem to care. So Facebook's problems, it got hit really hard, and it hasn't snapped back in bull market fashion. You know, typically in bull markets, these swoons are very quickly recovered, but not so in Facebook. Netflix is another story, and it's screaming today. It's up $30 to $341 off yesterday's lows, so it's had an almost 10% rally now in a matter of hours.
Are people, because of Netflix being an entertainment medium, they get excited when they hear, oh yeah, my favorite show is going to be back this fall, so I might as well get some shares.
Yeah, I think they do think that way, and I do myself, and I had such a problem finding decent movies. I'm kind of a movie buff, and when I look at the Netflix titles, they have actors that I've never heard of, and I've heard of pretty much all the actors, and the selection was awful. Someone sent me an email yesterday, and they said, here's a little secret. You can use this URL to access a much more comprehensive list of Netflix content. I didn't even know it was there. Up to that point, I thought, geez, Netflix, what is all the talk about? They have like 12 movies that they offer to watch. But it turns out there are a few more than that, but not a lot of what I would call quality programming. And as far as their algorithm that is so fabulous, it tells them exactly who I am, what I want to watch. I think it stinks, because if you rate enough movies, you wind up in a situation where you've sort of arbed your taste down to every movie is a 2.5 on a 4-star basis. So I can't see what all the fuss is with Netflix, although, I guess in the end, these stocks get valued according to how specific their information is about their customers.
Right, and a friend also asked, how come Netflix knows I've left the room and it pauses the movie? And I told him there's a TV camera in your TV, and it has a motion sensor, and it lets them know when you're not there. She was shocked that she was being spied on.
Oh, wait, so is that true?
Yeah.
Well, dang it, I didn't know that myself. I'm going to have to be really careful about how I behave when I'm watching Netflix, huh?
Yeah, it's there's a reason, and of course Netflix will say, well, we just used the motion sensor thing, on the camera. We weren't actually looking at you. But how do you know that? Because they've lied to us in the past when they said we're not gathering your information or we're not sharing it, but they were.
They have, and it comes on the heels of that. What was it, Alexa, that just started broadcasting recorded conversations from somebody's living room and sort of put them out there to the world at large. So, Netflix, one other piece of it, the valuation data, concerns their ability to create entertainment that's purportedly going to entertain. This is how Disney has been going at it for years, and why everything Disney puts out feels like it was produced in some boardroom. So, but Netflix is supposedly even better at that than Disney, and they know our taste so well that they're not going to waste a dime with movies that don't sell. And I think anything that's predicated on better content, you better take another look at the business model, because all of the big theater chains in the U.S. are failing. They are going to fail. And I know that because I went to a Houston theater not long ago. It was a Saturday, and they didn't have enough business on that Saturday night to open the upper deck of the theater. There's not enough content. Nobody wants to go up against some Marvel action hero movie that gets released on a given weekend. There's almost no independent movies being made, and yet Netflix is going to somehow captivate us all with their data point wise knowledge of our tastes.
Well, you go to a movie and you've spent $15 to get in, and another $20 for a few snacks, and $10 for parking. It's not a cheap night out. It's not like when you were a kid where a couple of quarters are going to bring you a whole afternoon's entertainment. Yeah,
it do get expensive. I think the exhibitor model is dead, and we're just, I think, going to segue into something where the ability of film distributors to send content to any individual device is going to determine what's made. And you or I, anybody could produce a movie and distribute it now. The theoretical capability is there. So it's just a question of when the Hollywood studios kind of go out of business and moviedom becomes very atomized.
Well, also when you go to the movies, you have to sit through half-an-hour commercials before you see the movie. It's not trailers. It's not showing you what's coming up. It's just commercials. And, I remember saying, to my partner, I could have watched half an hour of commercials at home.
It's the same thing has happened with cable TV. We used to get cable to avoid commercials. Now we get 700 channels where there are commercials on about 90% of them. And, with the movie commercials, the first time I saw them, maybe 10 or 15 years ago, I thought I've got to do everything I can to head this off. So my idea was to distribute clickers. Everybody would come into the theater with a clicker, and as soon as the commercials hit the big screen, people would start clicking to indicate that they were oblivious to the commercials. They wanted to drown out the sound of the commercials. But it just took me this attitude of mine a few years to get brought to heel, simply because the revenues, the theaters were so desperate for the additional advertising revenues that those commercial spots, Coca-Cola and whatever else you have, that there was no way it wasn't going to happen. So now it's happened to the extent that we all accept 30 minutes of commercials before the feature.
We'll have more with Rick Ackerman right after the break.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Ackerman Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Ackerman's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at ackermanresources.com.
Welcome back. We're speaking with Rick Ackerman. Rick, copper has taken such a pounding over the last while. Is it going to go lower, or has it hit bottom?
Well, copper definitely hit a perfect storm there, with not just a slowdown in China, which at the margin sets the price for copper, but of course with this tariff business. So copper's had a pretty big sell-off. It's come down from back in June, it was trading around $3.30 a pound. As we speak, it's at $2.69. But the interesting thing about copper is that for all the weakness that we've seen since June, it hasn't taken out any really important lows. The lowest ebb here for the downtrend was about $2.55 a pound, but it needed to come down around $2.47 to do any damage on the weekly chart. So I would say the jury's still out on copper, but it doesn't look like a disaster area to me. It looks more like a correction in a bull move that's got another leg.
One of President Trump's promises was to start looking at America infrastructure, which is very old. I was watching a documentary about the locks along the Mississippi, and as they were filming, one of the locks just floated away. It snapped off. So they need replacement. Bridges around North America are very old and aging and need replacement. We saw in Italy what happens when you don't update your infrastructure. Yet with tariffs, infrastructure replacement and repair will be very expensive. Do you think it'll ever happen?
Not even remotely possible. When I think of all of the other things that are going to get priority over repairing bridges and roads, one of them will be the pension system. We're headed into bankruptcy there, starting with the state of Illinois. Illinois is going to be the first state pension system that fails, and we're going to discover that there can't be a federal bailout of that system simply because it's not quantitative easing. It would literally be a helicopter drop of money to all of the recipients who get their pension checks every month. So you can't have a bailout of state pensions by the federal government. All right, so we're in so deep there, and we're in so deep just essentially trying to keep the Medicare and Social Security system solvent that we have huge deflationary bust coming. So where we would find the money, unless it came out of something like a WPA project, Works Progress Administration, we're not going to see it happen unless it's to put people to work during the Second Great Depression. When I lived in San Francisco, they did two massive projects over the time I was there. One was to totally overhaul the cable car system, and if you'd lived there and saw how dug up things were, you'd have an implicit sense of how much it cost to do it. And they also resurfaced the Golden Gate Bridge, and they would do that one giant section at a time at night. And when you see just in those two infrastructural systems the enormous cost of just keeping them from collapsing, and you multiply that across the U.S., and some cities are, particularly hard cases like Pittsburgh, which has a lot of rivers, a lot of bridges and things, you see that there's not enough money in the world to do a real, to kind of get our maintenance back to where it should have been over the last 50 years. So we've underinvested to the point where there's no way there will ever be enough money to bring these systems back into good repair.
We'll have more with Rick Ackerman right after this.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. Work programs are underway in Finland and planned for Canada this summer. Arctic Star trades on the TSX Venture Exchange symbol ADD, on Frankfurt symbol 82A1, and the OTCQB symbol ASDZF. Please visit our website arcticstar.ca or call us at 604-689-1799.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Rick Ackerman. Rick, are you surprised that gold hasn't picked up with so many international incidents happening and concerns about the market?
Yeah, we really haven't seen gold respond to, let's say, a geopolitical crisis since Russia rolled into Czechoslovakia. Gold long ago lost its appeal. The institutional investors don't much care about it, and I did refer to gold, at least in the eyes of professional money managers, as garbage. That's how they're treating it, and that's how it's being valued. But I think for gold to turn around is going to require a major tone change, a major change in the way that money managers think. They're going to have to wake up one morning in a cold sweat thinking, what am I doing, fully invested in U.S. stocks. I need some sort of protective hedge, or I need a whole new way of looking at things. So until that happens, and what I'm seeing today really doesn't show any evidence that it's going to happen soon, but it's going to take a watershed change really in the attitude of institutional investors before gold and silver can get some traction.
Is one of the problems with gold you have to pay to store it? It doesn't pay any interest or dividends, whereas if, for example, if you wanted gold, would you be better off to, say, invest in gold miners or gold stock?
Well, for sure. That's how the big guys think. It's the opportunity cost of money that matters, and if you're in gold, you're not getting any interest on it. You're not getting dividends, and it's just sort of sitting there being an unproductive asset. And these guys certainly like to keep the money moving. They like to see a velocity in anything they're invested in, and gold is kind of a dead play right now, where the key concern is not assets and movement in motion. It's really, are even the best mining companies going to survive this amazing, this brutal shakeout?
And then, of course, if gold does pick up, can they produce enough gold to meet the demand?
Well, that's another question. It's if you visit a mine, you begin to appreciate how labor and capital intensive it is. There's so much energy expended in blowing up giant hillsides and taking the rock and pulverizing it and running it through heap leaching systems and things like that. So you've got, tons and tons of machinery, huge energy inputs, lots of labor, and at the end of the week, all of it they've pulverized enough ore that they can pour maybe a couple ingots weighing 40 or 50 pounds of gold. That's it. So, the best you can hope for in gold is that the costs of producing it are going to curtail production to the extent that the demand will not be there, the supply will not be there to meet any resurgence in demand that may be in the future.
Currency crises, Turkey's in trouble. We had Venezuela devalue their bolivar by 95%. Are those, or is there a good chance that those could spill into what they call more developed countries?
Well, when you talk about more developed, you're really sort of posing the idea that the euro bloc will somehow get enmeshed, and we know that's possible, at least at a theoretical level, because we've seen even just a small bank in Cyprus have considerable consequences for the global system, and so you never really know what the contagion factor is going to be. And I tend to think that we're going to scrape by here no matter what happens with the Turkish lira. But now that the Turkish lira has been given up for dead, the news focus is somewhat shifted to Greece. Greece is finally out of its call it a workout period, but the concerns still persist, and it's only because, well, the U.S. stocks are going crazy, and the global economy does not seem to be a day or two from collapse, that we can look at Greece and say, well, whatever the problems, they'll be manageable. But within the Greece, but certainly in Italy, much larger economy, you have the seeds for disaster.
Well, the Italian government obviously wasn't spending money on infrastructure there either. And they did a survey in France, and over 800 bridges there are perhaps in dangerously bad shape. And the French economy is much stronger than Italy's.
Yeah, I think it's the same. I would say that Europe has, because of so much is new, and I say new meaning anything from World War II, that Europe does not have we're not in the same state of decrepitude as the U.S. in some ways. But still, what you're saying about France suggests that even in Europe, with all the modernization that's occurred over the last 60 or 70 years, that there's still not enough money to maintain what's there and what's been run down.
Well, of course, paving something is pretty routine, or updating your sewer system is pretty routine. There's nothing to cut a ribbon over, and politicians love to cut ribbons. So if it's a brand new bridge, they'll be there to cut a ribbon. To just repair a bridge, where's the joy in it for them?
Well, that's true. We all kind of suffer along with bridge repairs because, bridges usually connect very important points A to points B. And anywhere I've lived where they had bridges that were under repair, it was a considerable hardship. I lived on an island off the Jersey shore, and the inland waterway bridges were tremendously labor-intensive to fix, and it could take like 6 months to repair a relatively small drawbridge. So all over, if we haven't addressed this problem with the U.S. economy ostensibly at a millennial high. I mean, things have never been better, at least outwardly. And if we haven't really come to grips with the infrastructure problem in this time of great prosperity, as I mentioned earlier, the only way we're going to do it is through a WPA type thing, just to keep a workforce that's 30% unemployed somehow working.
Rick, thank you so much for chatting with us.
Always a pleasure, Jim.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. You're listening to HowStreet.com radio. Find us on Twitter at HowStreet. Our YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.